Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, February 27th at about 1:15 p.m. Eastern. Well, stocks are dropping today after the latest producer price index data came in this morning much hotter than expected, adding sticky inflation to a list of concerns that has caused market turbulence this month. All three benchmarks are in the red for February amid growing fears about the impact of artificial intelligence on specific industries and the overall economy. So on that note, we'll go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is, of course, the exchange-traded fund that closely follows our benchmark S&P 500 index. Excuse me. Now, today when I captured this chart, the SPY was trading at $684.26, still below the all-time highs set in January at $697. Now, the SPY, of course, is sitting below the 20-day moving average right now and the 50-day moving average, the red line and the green line, and they're both coming in here at 687. If we look down here to the moving average down here, it's coming in at 654. Now, we know we can't see it on this screen, but we know that from April's lows where the SPY was trading at 481, we know that ever since April, and that'll be almost a year here in a couple more months, we know that from April lows at 481, the SPY has been walking up the red line, the 20-day moving average, in an uptrend, higher lows and higher highs ever since that April low, until it came up here and hit this high in October at 690. And so from those April lows to this high is actually a 44% gain, which is really incredible. Very good. Now, before that October high, however, we can see that the rally for the first time back here started showing signs of fatigue, dropping to 653 in October, then retesting that low, falling to 652 in November. So we know that it went up to the October high and at 690, then fell back down here to this low, 652 in November. Then the SPY gained energy from there, moved back up above its 50 and 20-day moving averages, and pushed higher up here to 689, then dropped down to the 50-day, through the 50-day and closed lower at 671, then rallied up to 696, then down again, then up to 697 up here, then down to 676. So what we've ended up doing here is creating kind of a rally, trading in a zone level here, from 676 up here to 697, kind of trading in a zone here. Now, you can see that this past week, it hasn't been able to go back up to those highs like it did before. So now we've got the SPY where it was very comfortable trading above the 20 and 50 day. Now the SPY is actually trading just beneath the 20 and 50-day moving averages with this potential support level here of 676. Anyway, that's the current one. So we have this line to watch here, this 676. And we know that if the SPY starts back up again next week, we are going to have this resistance here at the 20-day and 50-day moving average, and then, of course, all the way up to the highs at 697 again. So we want to keep an eye on this 606, on the 676 level. Then we've got 671 down here, if that helps. Then we've got the 200-day. Hopefully we don't need it down here at 654. Hopefully we don't need it. Now, please know that next week after the closing bell on Thursday, Costco earnings come out. But we also have the situation in Iran, so there's no telling what that's going to turn into. Hopefully nothing. Hopefully it all works out well, but that will affect the stock market. So please do stay tuned and please do trade carefully. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the exchange traded fund that follows the NASDAQ 100. The NASDAQ 100 is an index of the top 100 non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks like the Magnificent Seven, Alphabet, Meta, Tesla, that whole thing, all of those. Now, when I captured this chart today right here, the Qs were trading at $605.22. This here is actually now 5% below the all-time highs touched in October and January at 637. So we know that it's not above that. The Qs are now trading at a discount to, of course, the 20-day moving average, which is coming in at 608.91. The 50-day moving average, the green line, which is coming, didn't mean to do that. The green line, which is coming in here at $615 and change, but still above, thankfully, the 200-day moving average, coming in at $586. Now, we can't see it on the screen, but we know that since the Qs made the April low at 402, we know the Qs rallied from there and walked up their 20-day moving average all the way from April, the April low at 402, all the way up to the October highs here, again at 637. And that was a 58% rally, so that's really incredible. I've been in the market for a long time, and that is really incredible. That was a 58% rally. So from these highs at 637, the Qs dove south down to 585 in November, then rallied to 628 in December, then fell to 600 right here. Then rallied and consolidated, rallied back up here over its 50 and 20 day, kind of went sideways here, fell back down a little bit, then rallied all the way up in January to retest that October high. It says, can we do it this time? And when it got up in January, just at the end of January, to these October highs again, the buyers put their hands in their pockets and said, we're not buying again. And you say, how does that even happen? It happens because even if most people don't know how to read charts the way we do, but they sure do know that if they were in the QQQ or something like it, when it got to 637, it sold off. They know that. It went down. So they're like, oh no, I'm not doing that again. And so price, it couldn't get over that line. The buyers aren't willing to pay up, so it headed back down and dropped down here to 594. Rallied back up to the 50 and 20 day here, couldn't get through it. Now what was support, these moving averages, is now resistance. And these moving averages can be tough dudes when it comes to forming a ceiling sometimes. So price went up after 594, rallied to the moving averages, dropped back down to 595, then tried again this past week to go up, got through the 20-day, but could not get above the 50-day moving average. And so we're back down, as I said a minute ago, down trading at $605 and change. So going forward here next week, what do we have? We have resistance in this zone with the moving averages at 615, of course, then up to 628, and then up to 637. Potential support we have down here at 595. We want to watch that line too. I'm watching 595. That's important. Then 586 at the 200-day moving average. And of course, we still have those November lows coming in at 581 if we need them for help. Hope not. Hope it doesn't get that low. So next week, again, we do have a lot going on, so please do maybe check in with your protective stops. Our final chart today is a daily chart of the Global X Hydrogen ETF. The HYDR is the symbol. It has 25 holdings in it. Top holdings include Bloom Energy, Plug, Ballard Power Systems, and Fuel Cell Energy. Now, when I captured this chart today, the HYDR was trading at $39.14, right above its 20-day moving average. 20 days coming in here, and the 20 days coming in here at $38. The 50 days coming in here at $36.89, and down here 31 and change is the 200-day moving average. Now, if you look at a long-term chart of the HYDR, which I tend to do before I get into anything, I like longer-term charts, you would see, and you'd never guess it from looking at this, that the HYDR made an all-time high in 2021 at $145. Isn't that amazing? Then, of course, it gradually headed lower. Now, on this chart, you can see the last quarter of 2025, and the HYDR is trading down here at about $20. Can you imagine, from 145? Got a little overbought there 3 or 4 years ago. But down here from the last part of August, September, and so forth of 2025, the HYDR started climbing pretty dramatically, and it climbed from that 20 up to a high here, October high. I'm looking at it here too. I'm sorry, to 47, lost my place, then down to 37, then retested this October high. It's amazing how price likes to retest where it's been before. Doesn't always happen, but it certainly did here. So it climbed back up to 47, then down to the December low down here at 31, falling through those moving averages, then started back up here, back over the 20, which by now was inverse to the 50, back up to 47, to 41 in January, excuse me, that's where I want to be. Then dropped down for a day, down below the 50-day moving average here for a day at 35, then up to where we are now. So it rallied from there, started walking along the 50, and again up to where we are now at $39 and change. So a lot of, I've told you before, I look at about 135, 140 ETF charts before I choose one to put in this place. A lot of charts right now are either very overbought or in a lot of cases very oversold, and we're not sure what's going to happen next here. So I kind of chose the HYDR as maybe a place to be next week that doesn't necessarily exactly follow where the S&P 500 hydrogen doesn't go along exactly with the market like that. It kind of plays its own song, which I like. And this is a pretty decent setup here, if it works, of course. So I like this. I like this look here. If in the coming week the HYDR can stay above its 50-day, the green line, the 50-day moving average is coming in at 36.89. So if in the coming week the HYDR can stay above $36 and change, and if the market is behaving reasonably well, I will buy a small position of the HYDR in my trading portfolio, and I'm going to put a stop in. I'm going to put in a pretty tight stop here. I'm not in the mood to get too big of a risk going here. So I'm going to put a stop at 36. Of course, you can put yours wherever you like. If and when the HYDR can rise above 41, here's the last pivot. If it can rise above 41, and in this particular market, I want it to close above 41 3 times. If it can do that, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the HYDR in the coming week. Now, by the way here, I know a lot of us are watching the IGV, which is the software ETF. If, I just want to throw this in here, if the IGV, it's trading down around $80 right now, if it closes above, and I want that 3 times too, if it closes above 83, and I don't know when or if that will happen, but if it closes above 83 for 3 consecutive trades or days, I may start nibbling on the IGV at that time. And by the way, the communication ETF that we talked about last week, that is actually breaking out today. So whether it will keep going, I don't know, but that is breaking out today. Anyway, I thought you might want that information. So now let's go on to our final slide here. Please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, this is a great time to check out my timeless training programs. Trade the Trend to Profits shows you how to take bigger profits out of the market over and over again. And if the HYDR breaks out here into an uptrend, we could use the points in this particular training as a guide to trading that particular ETF. With Trade the Trend to Profits, you'll learn how to buy a stock or ETF in the early stages of an uptrend, how to manage it as long as the trend is in place and at the right time. You'll know when to grab your profits. You'll learn how to buy low, sell high, and do it over and over again. I love it. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our popular 7 steps to successful trading down to how to swing trade successfully, one of our all-time favorites, how to trade the trend to profits, how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro, one of my absolute favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.